and the overall search volume for the whole 360 days is over 10 million. So the demand is huge. In the revenue per search, that is the potential of each single search volume you have captured, how much revenue it can generate in the whole year. We can see that this particular area, there are 4 campaigns where almost 72% of the spend is going. So we need to look into these 4 campaigns. Hello everyone, this is Anfal Ahmed from Ventures. We are an e-commerce service agency, and we manage Amazon account on day-to-day basis for our clientele. Today we are conducting an account audit. A seller recently approached us with his product and account, and he asked us to conduct the audit for his account because obviously he is making losses because of higher ad costs and higher advertisement costs. So we're going to look into his account. We have created a report, and obviously this is completely free. We conduct free audits for any Amazon sellers, and they can provide us the data, and we can provide our findings and recommendations what can be done into the account to fix the problems and issues they are facing. So let's start with the audit. So first of all, we're going to look into the demand section. So what we can see here is that we have almost 617 relevant keywords within this niche. And out of these 617 keywords, the product we are looking into has been indexed on 601 keywords, but it is only ranked in the top 10 position on 8 keywords only. In top 50, they are ranked on 196 keyword. The overall search volume is 335,000 in a 30 days period. So you can see that this is the ranking fragment section, and against you can see the search volumes and the keywords as well. So what we are looking here is that their product is only ranked on a single keyword in these top 20 keywords, and the rest of the keywords obviously where they are top 10, those are low search volume keywords. So the product is not organically well placed within the market. If we look into the keyword depth section, the top 10 keywords covers 62% of the overall search volume. So anything beyond 60 to 70% when we are dealing within the market where the overall search volume of top 10 keywords is more than 60% of the overall search volume, that means it will result in a higher CPC, because obviously more than 60% of the sales are coming from top 10 keywords. So every competitor who is selling within this market is targeting those keywords, and because of that, the CPCs are going to go high, and you will result in a higher ad cost, or maybe if you're getting a low conversion rate, so obviously it will result in a higher ad cost. The top 30 keywords covers 69%, and top 50 keywords covers 73% of the overall search volume. So that means there are still 27% keywords left. 27% search volume is left behind, and maybe we can find some opportunities out from those 27% of the search volume keywords. If we look into the market and category analysis, so overall the market size is huge. The annual market size is over $50 million or maybe more. This is the result based on data provided by Amazon. There are 755,000 orders per year, and the overall search volume for the whole 360 days is over 10 million. So the demand is huge. What we can see here is that the conversion rates are low. The niche conversion rate is comparatively low. Anything below 7-8% is going to create problems in terms of advertisement and considering the keyword depth as well. So this is going to be a problem. Average selling price is $66. If you look at the return ratio, it is 3.54, which is slightly higher than normal, but it can be managed. Average rating is 4.25. Search to purchase ratio is 1.79. If we look into this section, the market share opportunity analysis, so when we look at the top 3 competitors, they have covered only 8% of the traffic share. So they have their footprint on the 8% of the traffic share annually, and they have a market share of 35%. So it suggests that the traffic, whatever traffic they are getting, these top 3 competitors, they have a very high conversion rate. Obviously, it could be because of the brand positioning of these competitors, the history they have, the number of reviews they have. So that could be a reason for higher conversion rate, and that is why we can see that they have 35% market share. But if we talk about the top 10 competitors, they have 30% of the traffic share and 53% of market share. So half of the market has been gone towards the top 10 sellers. So that is a very competitive market, what we are looking at right now. If we talk about the top 24, they have captured 44% of the traffic share, and they have almost 70% of the market share. Again, the market share is reducing. Whatever left for other sellers. When this happens, when the top 3 or top 10 competitors are getting a major chunk of the market, it creates a barrier to entry within this. Within a niche, obviously you can launch a product, but it will need more time to stabilize your position. Then if we look on this side, so we have a sales funnel right here. Every 10 million searches create approximately 13 million clicks, obviously. And out of these 13 million, only 755,000 orders are converted, which creates obviously a conversion rate of 5.8%. So if we look at the revenue depth analysis, so we can see that the major traffic share is held by sellers who are older than, they have launched their product 1 year ago or more than 1 year ago. So they have been in the market since last 12 months or more than that. And they have a 50% traffic share, which is highest in this 4 categories. And they capture a revenue share of 41% approximately. The sellers who haven't completed their first year, they are covering 21% of the traffic share, and they have a very significant 47% of revenue, which suggests that there is some room for new sellers. Obviously not very new, because if we look at this number, the sellers who have been selling only since last 90 days, they only have 2.2% of traffic share and 0.5% of revenue share. So that suggests that once you have built some history and organic visibility and PPC, sponsored visibility, and you have gathered some reviews as well, so you can get a decent revenue share based on this analysis. When we look into the seller ratings, so sellers who, the majority of the traffic share is going towards the sellers who have 2,500 or more ratings on their product pages. And that is a very dominant position. And we can correlate it with the age of the seller between 1 to 3 years. So that is, they are generating more than 2,500 reviews within a span of 1 to 3 years. So that is why majority of the sales are going there. So that suggests that the buying behavior, the purchase behavior within this niche is based on reviews and feedback. The buyer are conscious how good the ratings are, or how many reviews are there. So that suggests that is the buyer behavior within this niche. The price point, the major price point, if we look by the pricing, so we can see that sellers who are selling their product at $50 or less than $50, they have the most traffic share, that is 54%, and the revenue share is 73%, which is huge. Moving ahead, when we look at the competition analysis, so this is our product, and we are selling at $22, and we have 141 reviews. The ratings are low slightly. The market average is 4.2, 4.3, and we have a rating of 4. So that is going to be a problem for them. They are priced well, but they have total ratings of 141. So they need more reviews. They need to build more reviews, more ratings, and they need to improve their ratings as well. Obviously, this is going to be a problem to get more conversions, and that could be a reason that they're not getting enough conversion, and their cost is pretty high, and they're making losses because of that. So if we look at the competitors, we see that there is an average rating of 4.2, 4.1, 4.2, 4.2, 4.5, 4.6, 3.8, and 4. So the sellers who are getting the most reviews. They have more than 4.1 or 4.2 ratings. So this is the benchmark basically, and they have to cover this particular area. They have to work on this area. The competitors are selling at a much higher price than our targeted seller. So in price point wise, we are better from our competitors, but we have to improve the ratings and gain more reviews, more positive reviews, overall improvement in the conversion rates. If we look into the keywords positioning of these competitors compared to our targeted product, so the top seller, they are ranked on top 10 position on 582 keywords. Obviously, these number of keywords include the relevant keywords and the semi-relevant and broader keywords as well, because when your product starts getting conversion, Amazon rank your product organically on some irrelevant or broader search terms as well. So that is very normal. That is why we are looking at that they have 1,000 keywords where they are ranked on top 50 position. So they are organically placed on 2,200 keywords. The second seller is placed on 2,500 and third is 1,400. This seller is organically ranked on 2,400 keywords, whether in top 10 or whether in top 50 or any other position. But they have a greater visibility compared to our seller. So what we need to do is that they have to create more visibility in terms of generating more sales and getting more conversion. They have to prove their organic visibility, and for that, obviously, they have to advertise their products and get sponsored conversion, and that's how they're going to build their sales. And once the sales starts coming in, obviously, the algorithm will improve their ranks on organic keywords as well. So problem is the ratings and the overall visibility. When we look into it, there is a KPI, what we look into, that is revenue per share. If you look at this particular area, we have calculated revenue per share. So what we are looking into in the revenue per search, that is the potential of each single search volume you have captured, how much revenue it can generate in the whole year. So here, when we look into the competitors, they are on average generating $3 or $4, approximately $4 for each of their search volume where they are organically placed. But compared to that, we have only 20 cents worth of revenue for each search volume we are capturing. So we need to improve. Obviously, we are not covering those high demanding keywords and high generating keywords. So we have to work on that particular area to generate more revenues and increase the search revenue per search. Okay, so this is their PPC result. The spend they have made in the last 30 days, that is only 1,700 approximately. And compared to the niche, the size of the niche, it suggests that the overall spend is low, but we can understand that they are getting a higher cost and higher CPC as well. If you look at the average CPC, that is 3.24, and average CPA is 26.63. So they are spending more than their price, because their price is $22 and they are spending $26 or $27 to generate one single order. So obviously the business is going to make losses. What we need to do is we need to figure out a way whether we can improve the conversion rate, which stands at 12% right now, which is obviously 2x of the market conversion rate. So if we can't push the conversion rate beyond 12% or 15%, we will need to look into the CPCs where we can find cheaper CPC opportunities. We need to look into the placements as well. That will be the overall direction we can get, and we need to figure out what keywords we can target, where we can find lower CPCs, and that help us control the overall ACOS. So in the last 30 days, they have targeted only 151 keywords out of the 600 keywords, more than 600 keywords there are. So they are only targeting the 25% search terms right now. And out of this 151 keywords, which they have targeted, only 23 have generated orders. 128 targets haven't generated on any order, and overall 26% of their spend has gone wasted. So in the initial phase, obviously this can be at that particular area when a product when a seller is exploring more keyword opportunities, they are trying discovery campaigns, they are trying this research campaigns, and they are trying to funnel out converting keywords into the campaigns. So at that time, we can experience higher wastage rate. But once your campaigns are stabilized and you have done enough optimization, so the normal range of wastage should be between 5 to 10%. If we look at the market benchmark regarding the CTR, the market CTR is 2%. They are getting 0% CTR. The second keyword has 3% market CTR. The average CTR within the market, they are getting 0%. Same goes for the third keyword. Only a few keywords they are targeting, they are getting a much higher, 2 to 3 keywords, they are getting higher CTR compared to the market. So overall, their CTRs are also low, and could be one of the reason could be there because of their ratings, which stands at 4, which are below market, and that's why people are not even clicking their product or checking out their offer. Same goes to the conversion rate. When we see the conversion rate, the average conversion rate within the market, we have 14%, 17%, 9%, and 9%, and their product haven't achieved any conversion on these keywords. So obviously buyers are avoiding their product. They really need to look into their product rating, and they need to improve the ratings. Otherwise, this is going to be a long-term problem for their product. If we look into the keyword performance matrix, so we have star, question mark, cash cow, and underdogs. When we this is basically we segment our keywords into 4 different sections: star, question mark, cash cows, and underdogs. And our target is to capture more and more star keywords. But when we look into it, that their spend towards star keywords is only 3%, and the sales share is approximately 20%. The major share is going toward the question mark, where they are facing a very high CPA cost, that is $30 per order. That is the area we need to check, that how we can convert these question mark keywords into star or cash cows, and we need to optimize those targets. And for that, we need to look into the CPCs, we need to look into the bidding strategies, and we need to look into the overall conversion rates as well. If you look into the target mix, mostly of their spend is going towards exact, which is, not bad. When you spend most of your advertisement spend or advertisement budget towards the exact targeting, so that is very focused. But that is only generating 56% sales share, and the CPA is pretty high, 36. That stands at $36 per order. So, this particular order suggests that either they need to improve the conversion rate, or we need to reduce the CPC or find low CPC opportunities to control and reduce these costs. Otherwise, the ad cost is going to be very high, and the overall tag cost is going to be very high. So, that won't help the overall business. So we have structured the campaign performance into 6 different areas, 6 different slabs in terms of ad cost ranges. And what we are trying to do is we are trying to find out and pinpoint the location we need to work on the optimization part. We are trying to find out the areas there where most of the leakages are happening, and most of the spend is going wasted. So we need to optimize those areas. One, we can see that this particular area, there are 4 campaigns where almost 72% of the spend is going. So we need to look into these 4 campaigns, because it falls under a cost of 100 or more. So we need to work on these campaigns, and if we can control this particular campaigns, that will give a significant boost in the ad cost and in their overall advertisement cost. So we have PPC budget. What we are suggesting here, that they at least, even though they are targeting a very high, they are getting very high ad cost and high CPC. So what we are suggesting, that the PPC budget they should spend on daily basis, that should be $100, because of the size of the market. And with that $100, we need to target CPC around $2 to bring down our ad cost and bring down the overall advertisement cost and make the business profitable. So we need to find out those opportunities, and we need to build the campaigns in a way where we can achieve this level of CPC, and that will help us in lowering the ACOS. And once we achieved, if we can achieve this particular area, so their gross profit is around 51%, which is a good amount to spare for PPC, and they have enough profit margins to absorb the high CPC costs. So once we can achieve those the target of achieving the lower CPCs, their revenues and their profitability can be improved because of their high margins and the overall control over the ACOS and the TACOS. And we need to also focus on the PPC and organic order ratio. Right now, their PPC to organic order ratio is 35 to 65%. That is, 65% orders are coming from sponsored ads. So we need to optimize in a way, and we need to improve our organic sales and need to increase the organic sales ratio so we can control the TACOS as well. Overall, the first point is that they have to improve their ratings, the product rating. We have to look into the reviews, why there have been negative reviews, and we need to analyze those reviews and the complaints the buyers are having, and the seller need to fix those issues. Secondly, the overall market is very competitive, so we need to survive in this market, or we have to make a stable placement within the market, and we want to go slow and steady. So we need to focus on cheaper CPC keywords. The keywords falls outside top 50 competitors range. So we need to target those 27% remaining search volumes where we can expect that there will be less competition, and because of that we can achieve lower CPCs. For the high search volume keywords, the competitive keywords, we should target lower placements which are not that high. We should try to achieve lower sponsored rank on those keywords, so at least we can bring in some traffic from those keywords as well, but not at a very high cost, and maybe they can result in better convergence and better ACOS. So that is how, if these targets can be achieved, then this account can see growth in their revenues as well and in their profitabilities as well.